Hey guys, welcome to the series, which is how to trade blank stock for a living. In today's video, we're going over how to trade SPY for a living. So again, guys, we're going to kind of walk you through the characteristics, the thing that SPY does, so you can actually trade this stock with success. And so again, I want to break down again how to swing trade SPY, how I do it, and some special features you should watch out for and know about when trading SPY. So anyways, when looking at SPY is sourced off the S&P 500. So this is the overall market ETF. So again, you're going to be getting typically small percentage gains on this stock because again, it is diversified. It's tracking over 500 different stocks in the market in all 11 different sectors. And so it is a very diversified ETF. Not saying you can't make great gains, but you can see here one of its largest runs it's just been on. It made about 100% return over about a year and a half or so. So that's a really good return. And again, if you're saying a 100% return is not good, then maybe this video is not for you because it's not a get rich quick overnight. But I do want to help you get rich consistently if possible. So anyways, let's talk about some things for SPY. So again, the first thing we need to discuss is very simple support and resistance levels. So SPY loves its support and resistance levels. So again, resistance is going to be where it previously topped out at. Support levels are going to be where it's previously bottomed out at. So again, here are some right here. We can even go in closer. We have a resistance here right here, and we have another support at this level right here. You can see that it hit this low and then it came back down and it hit this low again. So what is another thing we need to know about when we're trading SPY? Well, we need to know about the 200-day moving average, and that's what this line is right here. So the 200-day moving average, again, this can be pulled up on any charting platform you're using. Again, you just go into the indicators, you click on moving average, you go and you change the length to 200. This makes it a 200-day moving average, given you're on the one where each candle represents 1 day. So this is a 200-day moving average, and why do we need to know this? Well, first off, it acts as a very strong support level. So again, the stock tends to bounce off on it, but also it shows the direction of this stock. When the market is above, or when SPY is above this line, it tends to be a bullish market, meaning that the momentum and the strength is to the upside. When the stock is below this line, it tends to be a bearish market, meaning that the market is headed towards the downside. So again, that helps give us a rough understanding of which direction the market is in or what trend the market is in. And so that can kind of help us understand something else. Now, something that SPY does a lot, or something I want to point out, is SPY is known for its Doji Candles. I don't know if it's known in the world, but when I trade it, I always look for Doji Candles because it tends to respect those levels. Now, what do I mean by a Doji Candle? Well, again, I'm going to zoom out. We're just going to do a historical look on Doji Candles here. So again, let's find a good period. Yeah, I guess we'll start here. You can see here, Doji Candles at support and resistance levels are strong. As you can see here that we bumped into the 200-day moving average. We formed this really big Doji Candle. Then we kind of trended up after that. We had a Doji Candle here at a prior resistance level. Then we trended down. We had, again, you can see here Doji Candles galore, which is long wicks and small bodies, but they're not happening at any support or resistance level, so it's not really taking effect. What we look for is we look for a support level. You can see here that we have support level. We have the 200-day moving average line. We have a Doji Candle, and then the next day we look for a strong green candle, which again you can see here, and then again it kind of trended up after that. So again, you can just kind of see this throughout history. Here's another great example. You can see here where it formed some minor trends here. This was really fun to trade back in the day. I say back in the day. When was this? This is probably the 2019, 2018, something like that. We can see here where a Doji Candle formed at resistance. It trended down. A Doji Candle formed, and then it trended up. A Doji Candle formed, it trended down. A Doji Candle formed, it trended up. A Doji Candle formed, it trended down. This was actually got in here because, again, I was trading this up and down. I got in here, and then, again, my stop loss did get hit. Because again, this was a false breakout. Because again, not everything is 100% accurate. But Doji Candles at support and resistance levels for the S&P 500 are very strong. You can see here, this is a bigger Doji Candle, but it is one followed by a strong green candle, and then we have a run up. So again, you can see here that Doji Candles are very important. You see your Doji all near our all-time high level, and then coming down. Again, Doji candles are just very important to watch out for, especially near support and resistance levels. It's something that SPY loves. And so again, that is one aspect to understand how the market works here on SPY. Another one that this specifically works for the S&P 500. Yes, this is a trading strategy, but this is one that works amazingly well on the S&P 500. It mainly works well on futures. And so because the S&P 500 has a future, it works well. And so again, this will not work well with individual stocks, but it's called the MACD divergence play. So again, all you need to do is add the MACD, which is moving average convergence divergence indicator. Again, this is another free one that can be added to almost any chart. And what you're doing is you're looking for converging levels. And what I mean by that is you can see here how the highs on SPY are getting higher. So you can see here that this little line is going up. You can see here that the moving average lines are going down. This is what we mean by a divergence. You can see here that this line is diverting from this line. This is going up while this is going down. This indicates a reversal. You can see here that we got that reversal right here as we saw that the low was higher and then it kind of crashed down. So again, this works for both for the upside and the downside. And so again, you can just look for these moving average convergence divergence. You can even do it on an hourly chart if you want to swing trade on a closer time frame. Again, if we can kind of look at that, let's see if we can find a good example. This may be a good example. This is one example. Again, it's a bit too choppy. You can see here how these are coming down. It's at a level of support, which is good. You can see here this is converging up, showing that the momentum is increasing. And again, we kind of have that breakout to the upside. So that is one example. Another example of the long term. Yeah, so this is just a good example overall of how this works. Here's an example right here of how it's going up in this period, but this period is going down. This just shows that the moving average convergence divergence works well, especially on SPY. And so I just wanted to make sure I pointed that out. In this series, when we're talking about how to swing trade certain stocks for a living, I want to point out characteristics and strategies that work well with that stock so that if you want to use that stock, it can actually work well. Now, again, if you're someone who's like, okay, cool, but I want a proven strategy. Well, again, I am going to plug this. This is called the Improbable Stock software. It is software that I made for trend trading and swing trading. Again, it gives you a game plan based on the math of that stock. And what I wanted to point out is you can actually make about a 16% return every single year. Guess what? That is almost three times what the average market does every single year, just by swing trading the stock over and over and over. Again, if you do the compounded return, which means you invest all of the money you made and lost, again, you can average about a 20% return compounded. Again, if you want to see the past trade performance, again, you can see that here. You can make 7%, 3%, 1%, again, on all these trade alerts in the past. You can also see the losses and how well those do. But again, you can see the performance. Again, if you want to follow the game plan and get results like this for the S&P 500, I would highly recommend that you check out the Improbable Stock software. There's a 100% free trial, no credit card required. I would check this out and start following the alerts, whether with real money or with paper trading, to see if you like it. Anyways, guys, thank you so much for watching this video. I hope this gives you some insight on how to better swing trade SPY. Good luck, and I'll see you in the next video.